All right, let's talk about Pantera because we haven't gone there yet. We've been talking about all things DeFi, but we haven't really had anyone like you on the show to talk about investing in these instruments from a funds perspective. And I think it was a few months ago, Dan, when I was looking at this, I called up a bunch of my buddies in New York and I said, who's risk arbing this stuff? Like, who is it? And again, a few years ago, if it was the equities or FX market, you would know who it was, right? Dan, I mean, like you could be like, all right, it's the guys in Greenwich or this, you know who's doing it. But then with blockchain, I always wondered, I don't know who it is. Is it some people in Russia or Tel Aviv? And then I realized, some of your funds do a lot of that, like really interesting short-term looks also at crypto and investing, including long-term stuff. What is your life like as a fund? How do you look at these things? And what are some of the instruments you offer to investors with those different risk profiles? Maybe you could explain that.
Sure. So, since we fell down the rabbit hole, we're investing across the entire spectrum of blockchain. And so we have 4 different main funds. One has daily liquidity, and then venture has 10-year lockup. So, we cover the entire spectrum of just massively liquid all the way through normal hedge funds and venture. And it's trying to offer investors, a match to whatever specific sector they want to be in or whatever liquidity profile. So our Bitcoin fund is like an ETF, but it exists. ETFs don't exist yet. That allows investors to come in any US banking day and come out any other US banking day with no lockup. So it's a very efficient way for people to get exposure to Bitcoin. And then we have 2 quarterly liquidity hedge funds. And again, there's no lockups. We're trading things, like Polkadot, Audius that are massively liquid. So we don't need to lock people up. So people can come into our liquid token fund any month and come out at the end of any quarter. And then the ICO / early stage token space, it's now a bit slower because people want to hold things for a year to not be seen as unregistered securities. So that fund is people can come in every month. And every quarter they can ask to come out, but it does take 1 year to get the money back because we want to be able to hold things for SEC reasons. And then, venture obviously is straightforward, just investing in equities. So that was great. And we essentially were the first of each of those things to be launched in the United States. So we ended up with 4 separate funds. What we found is that particularly endowments really want an all-in-one blockchain type fund. They don't want to pick, is it early stage tokens or is it venture that's going to be best? So our current fundraise is a fund that covers the entire blockchain spectrum, all the way from very liquid things all the way through illiquid venture and pre-auction tokens. And that's been popular. And the other 2 reasons I actually think it's a better format for now is back in the day, equity and tokens were totally different. You would invest in projects like Bitcoin or Ethereum that just have a token and they would never have equity, or you'd invest in companies that would just be, using blockchain tech to do something better, faster, and cheaper, but they would never have a token. The world's much more complicated now, and so a lot of projects have both equity and tokens, or they start out as equity and become tokens. So having all-in-one, this blockchain fund that we're launching allows essentially both assets to be in the same fund, and so LPs in the fund are going to capture value. Like Brave being an example, the equity might do well, the basic attention token might do well, or maybe one goes to the moon and one goes to zero. And so it's nice to have it all in one fund. So the investors are hedged. And then the other bit that you mentioned is there's often a huge swing between value in tokens versus venture. And we just saw it. Tokens came down 55% over the space of a few weeks. May 17th was actually the most volatile week in Bitcoin history. So huge move. But venture is very slow to change and reprice. People are still doing term sheets from 3 or 4 months ago. Entrepreneurs still want the prices they heard a few months ago. So this new fund, we're able to essentially swing with that pendulum. And just recently we bought a bunch of liquid tokens in the fund because they were very cheap, and now they're starting to head back up. And I could imagine a time, a year or 2 from now, where tokens are really expensive and venture's cheap. And so we'll sell the tokens and buy an venture. And then you did mention high frequency trading. We do that in our liquid token fund. We have a quant team that's built a bunch of models over 4 or 5 years where we trade HFT across a lot of different tokens on a lot of different exchanges. and just trying to extract the inefficiencies. And you're talking about risk arb. We're in such a primordial market. There's a lot of inefficiencies. And I'm sure they'll be arbed out faster than in the traditional markets. It took RenTech from the 60s to now to make other markets really efficient, and it probably is not going to take 50 years in our market, but there still is a lot of opportunity. So our liquid token fund does about 5 to 12% of its risk in a set of quant models, and they have been making money and providing a diversified income stream.
Who's your competitor in high frequency stuff? Is it some computer somewhere? Is it a couple other funds like yours, or is it people you have no idea where they are in the world?
Yeah, I'm not sure that many of our kind of venture competitors in the space do HFT trading, but there's a ton of HFT shops like DRW and Jump Trading and firms like that also trade crypto. And so, I'm sure they're the ones we're mainly competing against.
And there's 5 years left in this market, you're saying, probably, or more, a little more.
I think there's a long time. I would say, I started on Wall Street in 1987, and I was like, wow, this stuff's not going to last. It's all going to get arbed out. Maybe I'll go back to being a structural engineer. This thing's not going to last. And 35 years later, still a lot of opportunities. So, any prediction that things get arbed out quickly is normally wrong. I think, there's a good bit of time here.
Okay, and then like you said, the fund you're raising for now, people wanted the whole spectrum. So you might hold Bitcoin, and you might hold some Polkadot, and you might hold some equity in the next Audius as well, kind of all in one fund to give people kind of this weird, this diversified exposure. Is that what they're looking for?
Yeah, it really is. It's trying to have the whole ecosystem in one fund, because that kind of removes the onus of stock selection basically from the allocator. And I went around in 2013 and pitched people Pantera Bitcoin fund. And I would get, the CIO of the most famous endowments and 20 other people around the table, and nobody bought it because that's really a very specific bet. One asset in one fund run by one fund manager, that didn't sell very well. On the way to the elevator, I always get, what's the minimum? Because people want to invest personally, but there's no way you're going to get them to put their university endowment into that. Okay. So people want to allocate to the concept of blockchain, and then let the manager, whether it's Pantera or one of our peers, decide, which subsector to be in: venture, liquid tokens, early stage tokens, and then within those subsectors, which assets to be in. And again, like I said, throughout the life cycle of the fund over the next 5 or 10 years, we can swing. Right now it's 100% liquid tokens. We're starting to invest in illiquid early stage deals and illiquid venture deals, and so the balance will probably shift a lot over the next 5 or so years, and then the fund will start winding down.
And so, for example, say with Audius, your high frequency guys could trade Audius. Your other fund, third fund, I guess, would also have equity in Audius or tokens. And your new fund might also think, what, we want to position in it going forward. Would that be possible on a variety of companies?
Yeah, it is. So right now, prior to the launch of our new fund, our 4 funds were essentially mutually exclusive. Any asset we bought could only go in one fund. Now, this is like a wrapper of all 4 of those concepts in one. And so any type of asset can go in the new blockchain fund. It will be our only venture fund going forward. So we finished investing venture fund 3 at the end of June. And so every new deal from July on goes into the blockchain fund, 100% of it. When we do invest in early stage tokens going forward, they're split between our evergreen hedge fund and this new venture style blockchain fund. And then the same thing with liquid tokens. When we invest in big liquid things like Polkadot or Ethereum or Bitcoin, they will also be split. And the only exception is we won't be doing the HFT stuff in this new blockchain fund because it's more of like an institutional endowment type product. And so HFT trading is not really the right fit.